having me. My name is Steven. In today's video, we shall be looking at what we refer to as section. How is section so important to our trading? And what are the effects of section in trading? Now, as a trader, you will realize that at a particular time during the time of day that we often get a lot of volatility. And why do we have this volatility? What are the reasons behind this volatility? This is what we shall be considering in this video. Now, if we look at this chart that is here, you will agree with me that we have what we refer to as different bosses that is here. Now, if you look at this boss that looks like a blue color, you will agree with me that it overlaps with this very balls that are overlapping balls. These bosses that are here is referred to as section. Now, here is New York section, which is the blue one, and the one that looks like turquoise color is the London section. And this that come from here, this is what we refer to as a volatility section. That is this vertical line. This is where the market starts for today. So that is why you are seeing this vertical line, and this vertical line is what we refer to as volatility section. Now, you will see that there's another purple line that is here. This line that is here that looks like a boss is what we refer to as Asia section. Now, we are going to consider how these sections are interwoven. So we are going to consider this section one by one. So I want you to pay particular attention to what I'll be explaining in this video. Now, from here we have about 5 sections. We have the volatility section, the Asia section, the European section, the UK section, which is the London Open, and New York section, which is the American zone. Now, these 5 sections together make what we refer to as forex section. And when these sections are overlapping, that is where we have what we call volatilities in the market. Now, if you look at this place now, you will agree with me that from here to this place, there is what we call overlapping period. From here now we have the Tokyo section, and we also have the London section, and we also have what we refer to as the New York section. These sections are overlapping together, and while we are having this section from here, you will agree with me that from Tokyo section there are no much move from the forex market. That is, the volatility, the liquidity that is here is very poor. That is not as much as expected, and that is why you are seeing this coming so slow around this area. Now, immediately we have the London Open after the New York midnight. This very green line, this dotted green line, is what we refer to as New York midnight. So immediately we have this London Open that happened between here and here. So we have what we refer to as London Open. Then from here we have a very small ball that is here. This is referred to as gap. So while you are trading section, you must know the difference between the open time, and the difference between the gap period. Now, the gap period that is here, which is this very line. So let me magnify the chart so that you can see it very well. So from here, which is the London Open, this is gap. So this gap happened 1 hour when the London Open, that is Immediately they open, we have a gap for 1 hour. So when you are trading this, when you are trading the London Open, you must give a free period of 1 hour before you come in. That is, because if you don't give that free period, it is called gap. And this gap literally means that when you are trading within the gap of the day. So from here to this place, look at how the market continue to move down after the gap. So the reason why that we are trying to avoid the gap while trading is this, because especially when you are trading cable, you realize that when the banks in America, the banks in UK resume, let's go to cable and see what the cable is doing. Let's see how the cable reacts for today. This is cable. Let's see the reaction of cable. Now, if you look at this area now, you will agree with me that when they resume from here, look at the move. The move was a little bit going, it was not moving fine. Cable was not moving fine. But immediately they resume, look at what happened from here. After the gap, we have the market continue to do what we have a very strong move to the downside. That is, we have our 240 moving average being broken around this place. Look at the move to the downside. So this is telling you that when they open during the London Open, there is always what we refer to gap, and this gap are the period that traders need to wait. Traders need to exercise a lot of patience, not trading within the gap. You must avoid gap. Then another thing that always happen is that after the gap, we will experience a new direction. It could be up, it could be down. Now, from this case now, after the gap, we realize that what we have from here is that we have a run down, that we have a break of what? A break of our 240 moving average. A break of the last Tokyo section was broken, and this is what actually happened. Look at the way it run down. Then after this place, when the New York Open resume, look at what happened. After the gap, after 1 hour gap, we also have a very serious run down from here. Look at the move, it's run down from here. So the essence of this is that when we have two or more sections that are overlapping together, we always experience volatility in the market. That is the essence of this bourse. That's the essence of this bourse. That's why we have been able to segment the market into sections. Now, and this software has been able to do that. If you need this software, I implore you to subscribe to this channel. While you subscribe, just write "I subscribe to this channel," and I'm going to get back to you. I'm going to contact the owner of this thing and see the way we can send this one to you. The owner of this software, and see the way this software can be sent to you for you to use it in your trading, for you to add it to your arsenal. So go to the subscribe section, just write "I subscribe." Then when you do that, I will see what I can do. Now, if you look at this place now, immediately we have what? We have the New York Open, which is the blue balls. Immediately they resume from here. Look at what happened. Immediately, look at the move. The move run down to this place. Then after the London close, then the volatility become so salty. That is, there are no much move again. Then after the London close, look at what happened. We continue to experience a run down. From run down, we continue to experience what? We continue to experience a reversal after the London close. So immediately the London close, look at what we are experiencing from here, because we only have one section available in the market. The other sections have closed. That is, after these balls here, after the pulse here, then what do we have from here? Now let me draw a line for you to be able to see it very clearly. That is, from here we have what you call the London close. This is the close. Then after this place, we have low liquidity in the market. The liquidity become very slow. Liquidity become very minute, and at the end of the day, the prices continue to reverse from here. Now, I think we need to dwell more on the gap. Let's expatiate more on the gap, so that when we are trading, we are supposed to know when exactly the kind of situation that we are in. if you look at this place, the London gap is very, very important. Why is it important? The essence of having the gap in London is for us to be able to wait. That is, when the market resumes, we have to wait for an hour to be able to see what is happening, especially when you are trading the Great Britain USD. That is, when you are trading the cable. Now, if you look at it from here, this gap is telling us that the banks are preparing to come into the market. And because when they come in, there's always what at times they always come with liquidity to change the direction of the market. That is why we are trading, we must take note of the gap. Gap is very important while trading, because if you look at this place, you can't trade this gap. This place, that means after we have the New York midnight, then we have the Tokyo section, and everything is coming up. Then we need to be conversant, we need to be patient, we need to be aware, we need to learn what is the gap. So the difference between here and here needs to be calculated, which is probably 14 pips. Then we need to wait after the gap to see the reaction of the price. Even when the gap finish, you still have to wait for like an hour to see where the direction of the market will be. If you look at this place after the gap from here, the market continue to find a way. There are a lot of negotiation from here, and when they could not succeed, we have a break of this candle, which is a break of our 240 moving average, and here is the move. The move run down to New York section. It run down to New York section. So we need to be very careful how we trade during the London Open, because that is exactly where we have a lot of volatility coming up. Because at London Open, we are going to have about 3 sections that is being combined to London. We are going to have the London Open, we are going to have the Wellington section, we are going to have the Euro section. These are the European section, these are the sections that are available. So why trading that? What we need to do is to exercise a lot of patience, because we don't want to be caught in the gap. We don't want to be caught with the activities of the UK banks. When they come in, they release a lot of money into the market and see spark. You understand? There's going to be spark in the market. And what they do initially is that they know where every trader pays their stop, especially on the pounds. They know where traders are placing their stop, and because of that, what they do is to hunt the stop. Now let's assume that from here when the market resumes, what they do is this: they go up to hunt the stop and do what, and come back to, and the market come back to its normal position, because the market will always do what it's supposed to do. The market reacts to its own direction. Whatever they do, even if they put a lot of volatility, they put a lot of money to make the direction change, the market will still come back. The direction will still come back to a normal position, to where it's supposed to be. So that is why we are trading in the morning, when we are trading the UK Open, we need to be very careful. We need to be aware of the gap. And we have to stay out of the market for like an hour or 2 hours before coming in. So from here now, we have a very good rundown from here. Look at after the break from here. Look at how it moved. It moved down to New York section. So this is the New York section. The market run down to New York section. So, and when the New York section resume, we still have another gap, but the New York section gap is not as pronounced as the London Open. It's not as pronounced as the London gap. The reason is that they are not manipulating the direction during the New York section. So immediately they open, now we begin to experience more volatility. When they open from here to here, we see a lot of volatility that run down to this place. Look at the volatility runs down to this place. Look at the move. It's run down to this place. This will not have happened ordinarily. Why? Because if the system, if the market is not overlapping, we will not have been experiencing these high volumes of volatility in the market. The reason why we are experiencing these high volumes of volatility is that we have overlapping section, that we have two or more sections coming together and make it more pronounced. Two or more sections are coming together to make it more pronounced. So in other words, we have an overlapping section. So if there are no overlapping section, this will not happen. Let's take for instance, if the New York Open, maybe during the New York Open, when they open, there are bank holidays in New York. That is to tell you that there will be no much, the volatility on that day will not be as much as what we are seeing now, because there are no activity in New York section. So if there is bank holiday, in most cases when you are trading, we discover that there is bank holiday. Probably there is an holiday, maybe American Independence. This will actually affect the volatility of the market. So while we are trading, we must be careful as to how we trade during section. This is what makes you a good trader. You must know the section that we have. You must consider the kind of section that we are trading. Now let's compare the chart and see how this has actually run for today. Now if you take this one off, you will agree with me that this, from this place that we have this buzz from here, this very buzz that we have from here, is telling us that we have an overlapping section, and because of the overlapping section, there is going to be much volatility. And immediately the London close, look at what happened during the London close. We have a reverse up. That is, we have a reverse. There is a reverse of the price. The price reverse to an uptrend and literally continue the move, and until there we continue to have what? We continue to have a change of price towards another direction. So this is telling us that overlapping section bring in volatility, bring in liquidity into the market. So there is nothing much. It's just for us to understand that when two or more sections are combined together, you are going to see what? You are going to see a lot of volatility in the market. So if you need this software, I advise you to subscribe to the channel. Just click I subscribe. Then I will know how to send the email. To send the software to you, and I will know how I will contact the owner of this software and send it to you. So let's see how this. Let's look at another chart and see how this goes. Let's see. This is US dollars against Japanese yen. Look at, you discover that they all are the same way. They all trend the same way. Look at it from here. Look at, although this is in a side way, but yet we still have a better. So look at, the market start from volatility section. If I put this thing here, look at, we have volatility section, which is New Zealand. This is where the market start from here. Then after then we have what we call Tokyo section. This is Tokyo section. Immediately the Tokyo close, then we continue to have a rundown. We have a free period to New York midnight. Then after the New York midnight, we have the London Open. Look at the London Open. There are gaps within the London Open. We can't trade the gap. Then we have to wait for 1 hour or probably 2 hours. And we said we wait for 2 hours, because this will literally give you an advantage to probably know where the direction of the market will go. So immediately the New York gap, after an hour, look at what is happening. We still have to wait for another 1 hour to see the way the action of the price are doing. So this is just the sentiment. This is a sentiment trading, because when you look at the whole way, just look at what are the sentiment that the market always have during a particular section. After the gap, we all realize that we need to wait for. After the gap, we still need to wait. The gap will give, when they open, the gap will give us 1 hour. Then after the gap, we still have to wait for another 1 hour before we can take our trade for the day. So I believe with this little information at your disposal is going to assist you a lot to be able to have a better trading decision. So I want you to subscribe to this channel so that if you need this software, I can have a better way of arranging the software for you. Then you can use it during trading. So what I do in most cases is that I put this in a separate system and I look at it in another way. I look at it in a separate system, in a separate laptop. That's how I do, so that I will know, okay, what session am I trading in? What kind of gap am I having? So after the whole gap and I see the way, then that is when I begin to execute my trade. So I wish you good luck in your trading, and I pray that you all succeed in this very crazy market. So